The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, everybody. Tommy O'Brien. I'm here with Tom O'Brien. It's Tuesday morning of the trading week, starting things off with a little bit of volatility. You got the Nasdaq in positive territory, up 11 points, or almost 0.2%. You got S&Ps off 7 points, or negative almost 0.3%. And you got the Dow, the laggard of the group, off 155, 160, call it, almost 0.6, 2/3%. Morning, Tom.
How you doing, Tommy?
I'm doing well, man. How are you?
Good. Well, you know, these markets, the bottom line, folks, you know, you got the S&P a little red, but these things were down 19 bucks earlier.
Yes.
So this thing's trying to make its way, you know, into the green here.
Quite a bounce that we got from about 9:15 up until about 9:45, right? And from there, in the last 10, 15, 20 minutes, we've pulled back a little bit. Seems like even on the S&Ps, we got up to about 27.32, so we're off about 9 points from that high. And in the early session, the lows we made were 27.09, so and that's about 5 o'clock a.m. Eastern time. We're 15 points off that low that we made, so definitely volatility in both directions. You get the VIX trading about $20.50. VIX in brand new territory, hanging above a decent level for an extended period of time, and maybe that's a little bit of a new normal.
And yeah, I would say that. Gold, you know, we had that down to 1337. You're at 1341. 227,000 contracts traded. That's not a bad setup. I mean, we went topside last week, had the volume. Friday, bottom line, couldn't hold price. You're coming into the strength here. You know, we'll see whether we can get a rejection, a lower price, but the volume is definitely lighter than how we went topside.
Okay.
And, you know, folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You'll see the banner on the top of the side. Hit the banner, bring it up. You can get used to the demo account as we trade these defined option contracts. And guess what, Tom?
What's that?
I finally went short Bitcoin.
Oh, did you? I was waiting until we get to it. We're at quite a level.
What I did, folks, is I shorted 1/2 of Bitcoin. I sold 5 contracts this morning. Let me see what we did here.
Perfect. So you got Bitcoin right now trading 11,468. And I was, you know, on the 9 o'clock, 10 o'clock update, you can't help but exclaim that we are in some territory we haven't seen in a little while. We were just at 6,000. We're almost up 100% from that 6,000 price point. Pretty remarkable, and it wasn't long before that we were just at 20,000, right?
Right. If I bring this over, I'll show you what I did here. So, and I just did it. I was waiting for this thing to get up into the, you know, area where I felt that at least you had a decent risk versus the reward. Just as you said, you know,
sure.
This has been a good bounce, folks. You know, so what we had is that I think so. These are the weekly binaries. So now, on the weekly binaries now, folks, what happens
weekly
is this.
spreads, right? Weekly spreads.
Weekly spreads, yes. So it's really a 3-day spread now. Well, a 4-day spread counting today.
4 days,
because
yeah.
This will expire at 3 o'clock on Friday. So you can see what I did here. Let's see what I did.
Yeah, so the spread, just to sum it up, so the spread's going from 6,500 to 16,500. So you get a $10,000 spread, and each contract's going to be basically 1/10 of a Bitcoin. So for every $10 in the price of movement in Bitcoin, you're going to get $1 of action in your contract. So that's where I can see you got 5 contracts, so you essentially have half a Bitcoin. So every $1 movement in Bitcoin, right, you're going to have 50 cents of movement in price for a profit. Yeah.
So I sold 5 of them.
Nice.
I sold 5 at, let's see, 11,480.
Okay, so almost square right in the middle.
Yep.
So
Which I liked.
Yeah, because you're getting it right at basically what the price is going to be, right? In terms of, you know, you're selling it with equal loss potential to the upside, profit potential to the downside, and you're getting in kind of right at market. Now, these, you know, the middle of the spread is going to be 11.5. That's what, so you got in at 11.485. So you almost have equal risk, and you're just able to leverage. We have half a Bitcoin in there.
Right. So we'll see where this shakes out. The cool thing here, folks, is that I have basically, 96 hours almost.
Oh, yeah.
Well, no, short of I get 86. I get 84 hours.
You got a lot of time, for sure.
Yeah. So we'll see where it does shake out. But I like the aspect I'll show you on this chart, because I like what we will have in the future that we really don't have right now, folks, is that you're going to be able to get the volumes at a certain point off the actual CBOE and CBOT. But you can see this is like up to ice. That's what we've just done. We went from a price point of 59.22.
If you could just refresh your screen one more time, if you wouldn't mind.
Yeah. And I'm getting this fixed today, folks, so this will be fixed.
There we go.
Okay, so we went from 59.22. We hit 11,646, and I like how it just coming into ice there, because it's like, guess what? If this thing breaks the 12,000, well, guess what? It could be at 16 to 17,000, in a heartbeat. But my take is that this is where you come into major resistance, and we'll see. All I need is a pullback. I don't need the bottom here. Do you know what I mean? Well,
definitely.
And this is where you get the choice, folks. You get the choice when you want to close it out, which is pretty cool.
Yeah, and you got Tuesday, and you got all week until Friday.
Yeah.
And man, we've had some volatility in those cryptos for sure.
Oh, listen, the way that Bitcoin trades, it blows my mind that you can actually short it that close to the price. It makes sense, but
no. And just to go over the trade again, just so anyone who are watching it for the first time, so you get from 6,500 up to 16.5. I'm pulling up the market right here. So right now the market is trading bid offer 11,445 by 11,470. If you're selling the contracts, as we said, you're trading basically, you have 1/10 of the risk. So your risk is up to 16,500, and that's where per contract you're basically risking about 500 with a profit potential of about 500, and that's because you have $5,000 of Bitcoin risk to the upside versus the $5,000 in the price of Bitcoin profit potential to the downside. So $500 per contract. But like you're saying, you're getting in. I mean, you can see Bitcoin right now 11,456, and the bid offer is basically straddling it with about $10, $15 on each side.
Right, not bad.
No, $10 in Bitcoin. That's quite a penny in the market, right?
Yeah, well, we certainly didn't have that, folks, before they actually start trading it at the CBOE and the CME. Now, just look at this too. I have the actual numbers up here, and these numbers this morning are pretty intense, so I'm not the only one that is decided to trade these things. Look at the CBOE. It's 10:14 in the morning. That's already done 5,000 contracts, and the CME has done 1,300, which equals about 5,100. They're even this morning, because the CME, folks, is 5 coins per contract. The CBOE is only 1. That's a lot of volume right now. So the bulls and bears are going to be fighting this out, man. This is pretty intense. Yeah. And so what will happen, too, when I was talking about the volume, folks, both of these, CBOE and CME, they actually have the volume stats, and, give it a few more months, because this just started, 2 months ago.
Sure.
Then you're going to be able to get an inclination of the volume going up versus going down versus where we're at. So, pretty wild, man.
All right, come on back, folks. We'll see where this market is in 3 minutes. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tommy O'Brien with Tom O'Brien. Dow off 150, S&P's off 6, NASDAQ the one positive by 19 or almost 0.3%. NASDAQ just not stopping. How about some earnings? You see Walmart. We had Walmart really getting hit this morning with their online growth suffering dramatically, and they're down about 9% right now, I think.
Look at that. That's smoking, man.
Oof. I mean, that's, you know, for a company that is the size of Walmart to shave, it's now 9.25%. You know, 1/10 of the value off that company is pretty remarkable. But when you look at the big problem, which was their online sales grew 23% in the holiday quarter versus 29% in the same period a year ago, and 50% sequentially from the third quarter. That's not the type of online growth that they're supposed to be coming into if they're going to be competing with Amazon, right? And that's the fear in that equity right now.
So, you know, technically, you know, this is what Walmart had gone topside November 15th. The top of that gap is $90. So it's like coming at you. It's already breaking the swing low from the 9th of February at 96.43. It's taking that apart. I expect that's going to get hit. And fundamentally, you know, the bottom line is that Walmart is not Amazon. Their customer base doesn't have the money that the Amazon customer base has. So it's like, you know, when you just sit here and look at it, it's like, yes, it's the largest it's the largest store in the world. They're going to do fine, but how are they going to go up the socioeconomic chain in order to get shoppers that have more money, right? I mean,
it would seem like, though, that at some point somebody's going to come along that's going to be a competitor for Amazon, right? I mean, they are not by far the price leader. You know, I mean, they have great deals, and the Prime is, but it's not where it once was, where you can just pull it up and know that you're going to by far pay the cheapest product. There's a lot of articles that talk about, you know, they have this.
No, I agree.
They have this great perception that they are. But there is room, and it would make sense that, as you know, and kudos to Amazon, because guess what? If you can have those types of margins with everybody perceiving as if you're by far the lowest cost person selling it on the internet, but the only point being, you know, at some point there's got to be a competitor that comes into that arena, and it's tough to find anybody that could compete besides Walmart, but they're not competing yet. I agree.
Yeah, yeah, and you know, we'll see where it shakes out, but I suspect, you know, that, well, I think it has to do with what is the customer base, and, you know, how are they going to get the customers, because you bring up a great point, Tommy, about the price, because I've found myself, even the last 7 or 8 months, saying, man, this seems like I'm paying like too much money for paper towels right now. Do you know what I mean? So I have to check. That's what I end up doing. I have basically...
Definitely.
I try to check, because what happens, you know, there's so many different kinds of them. Like
Sure.
if you get, you know, the Bounty ones, you get the 12 packs, you get the 24 packs, but then you get the huge 24 packs. So you got to kind of figure out like,
it really
what
does seem like Bounty has about 10, 15 different price points that just add to confusion. I hear you.
Right. Right.
Yeah, but that's across the board. And, you know, if they start competing where, you know, the only reason that Amazon has that lock on you know, people with disposable income to spend, or the money to spend, is because they were the first ones on the internet that offered that service at an affordable price with great shipping.
Right.
Shipping is now something that Walmart, I'm sure, competes in, as in, you know, they're not charging for it. I'm sure there's ways that they're factoring in free shipping, whatever it is, knowing they have to compete with Amazon. And if it starts becoming where, you know, it's instead of you just saying, okay, I'm going to start ordering paper towels, it's an automatic go to Amazon. All that has to happen is Walmart has to enter that arena where you start checking them. And it sounds like
you know what I'm going to do next
you're
time.
already
I'm gonna
there,
do that.
right?
I'm going to do that.
Yeah.
You know what? In fact, when we get off at 11 o'clock, I'm going to do that.
That's
because it's worth it.
It is.
Right?
It is.
I can put the same package up next to each other. I'm going to do that and see where that shakes out. Interesting. Yeah. So you get another. You get Rite Aid, Albertsons. Okay, this Rite Aid, folks. So let me tell you something. This Rite Aid has like more than 9 lives as a cat. It's been trading. It's been trading at $2 since 1999.
Okay.
And what you have here is this. So check this out. This is going to be a trip watching this whole thing shake out, because what Cerberus is doing here, okay, Alberts is owned by Cerberus. Cerberus has been in this grocery store at the dead end of it for 13 years. This is their bailout. What they're going to do is that they're making like they're buying it, but the bottom line is that they tried to do an IPO. It failed for Albertsons, because Albertsons is like Rite Aid. They're both dead dogs.
Okay.
But guess what? They'll pull this deal off, and then they have paper to get out of their investment. That's what they needed. They needed paper to get out of their investment.
Without going through an IPO in a tough market right now for that, sure.
Because it would fail.
Right.
It already failed. It failed in a good market.
Yeah.
How's that?
Yeah.
Yeah. You know, so they found another way to get out and stick the rest of the shareholders of Rite Aid with 2 dogs now. Now you got.
Did you see? I mean, the pre-market action on Rite Aid was pretty remarkable. So yeah, it closed, I believe, at about 213 last week. Spikes all the way up to 283 pre-market.
Really?
Oh yeah. Oh yeah, and that's at about. It was up there. This wasn't just one spike. I mean, let's see. So at about 4:30 in the morning, it was already up to about 265. By about 6 in the morning, it's hanging at 260, jumps up to 270. There's some crazy bar at about 7 in the morning where it says it spikes down to 230, but that seems like it might be one trade, because it's still up to 283 as about 7:20. It starts a little bit of a slide, but even as 8 in the morning, it's that bar at 8 in the morning goes from 255 to 280. And there it starts sliding, and from there it jumps down, and we're barely up 5 pennies from the close Friday, but quite a number in terms of people jumping in there at 283, because that's many bars. I'm talking about many bars up there, not just one bar. It was hanging up there for a good few hours.
And if we go over to you got NXPI, this is going to be this is Qualcomm and NXPI. Bottom line. The Qualcomm NXPI wants to take. Yeah,
they had raised their bid for NXP, right? And so I think it's to like 127, which makes sense.
From 110.
Yeah, so it's trading right now at 125.76, was as high as like 126.39. And that's interesting in light of Qualcomm making that bid, and then you have Broadcom going after Qualcomm still, right? Lots going on there.
And what's happening here, so picture it. So Qualcomm does $21 billion, NXP does 10, Broadcom does 21. And what Broadcom had said is that if you go up past 110, we don't want you with Qualcomm, or you nix the deal. So Qualcomm is going to 125.
127,
like,
I think. Yep.
127, yeah. You have Elliott Management, which controls 28% of the stock. Them, along with these eight other shareholders, they're saying that they're behind the deal. So now it looks like to me that this deal will get done, and then Broadcom is going to have to come back at them later, because Broadcom will come back at them. The difference is going to be is that Broadcom does 21 million, and if the deal goes through, these guys are going to do 33 million, so it's going to be a lot harder to pull it off. But
yeah,
the way
billion, right? Billion.
Billion, rather.
Yeah.
Billion, yeah. But the way that Qualcomm does business, that's how that guy has grown that business exponentially anyway. So he's not going away. He doesn't have much choice.
Big numbers, totally.
Yeah. Monster.
Come on back, folks. We're back right now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. Markets just kind of hanging around where they've been most of the hour. NASDAQ up about 0.2%. S&P's down about 0.3, and the Dow, the laggard, down about 0.6%.
Yeah, let's see what's inside this. So inside the Dow Industrials, we have strength versus the weakness. Let's see what we got out here. So, oh, look at this. Walmart's putting 68 negative points into it. Look at that.
Yeah.
United Health 22, Johnson & Johnson 14, putting positive.
I was just going to say, and Walmart's only it's $105 stock to start the day, right? It's down about $10. Imagine if that was one of the $250 stocks and it's down 10%. That'd be a 25 point. That would be putting like 200 points itself if it was a $250 stock. But go ahead.
Pretty intense,
yeah,
man. Yeah. So positives, Caterpillar's putting 7 positive points, Boeing 5, Apple 5. We go inside the NDX 100. We look at the strength versus the weakness there. We get the NDX up 23 points. That's AMAT is up 2.8%. CLAC is up 2.5. ADI, Analog Devices, 2.4. Lam 2.2. That's interesting. Those are all the chip stocks, and that's all about, of course, Qualcomm, NXPI, too.
Okay,
you know what I mean?
Definitely.
Wow.
Yeah.
Taken away from it, Shire is down 4%. Qualcomm's up 3.4. Kraft Heinz, that's down again. That's down 2.3. And folks, if you, let's see, we're going to be Traders Expo this coming Sunday night. It opens in Times Square, Marriott Marquis. I'm going to be up there Sunday night, Monday, and Tuesday.
Yeah. Always fun.
Me.
New York, Times Square, Marriott Marquis, Traders Expo, February 25th through 27th. So that starts Sunday through Tuesday. And I believe you're speaking Tuesday around noonish.
Yes.
So it should be a good session. Always some good traders. Always good to see our Tigers and Tigresses out there in the New York market.
You know what I just heard this morning? This is going to blow my mind. I got to pull up the weather. When I was on the way to work this morning, Tom Keene on Bloomberg was saying that it's going to be 70 degrees on Thursday.
You heard
New
it.
York.
You heard it right, I believe, because I had heard it's going to be 66 in Boston on Wednesday. So that would mean that, yeah, pretty remarkable. And they just got 6 inches of snow last week or something like that. So pretty remarkable swings for sure. And as you do it, I'm pulling it up because I got to see myself. We'll get the weather out for the Traders Expo. But either way, your flight should go well, man. You should have no problem flying into New York in 70-degree weather in February.
I guess so, man.
Pretty cool.
Amazing, no doubt. You know, if we go over and we take a look, let's look at this gold contract. So gold's held pretty good here, folks. It's intriguing. We'll bring up the dollar next. But you know, we got down to 1337. It didn't mess with any major swing point, and bottom line is that, you know, they got to get it a lot lower than this, you know, to get that price down. If we take a look at the dollar index, now the dollar index on Friday tested its high volume low, the high volume low that we're talking about. Let me get this up so everyone can see it. So the number we're talking about, it tested its January 25th high volume low. That was 88,255. We did it with lighter volume. Now the bottom line is that, can it get any juice topside? Thus far, you only got 11,000 contracts, and that is anemic, folks, okay? I suspect it's going to stay in this consolidation. It can even get up to the high of the consolidation, which is 90.450. But bottom line is that you are going up on dramatically lighter volume. Right now, we're going into 39,000 contracts, and we get 11,788. And what does happen with the index, with the dollar index, you get a good amount of the contract volume from 8:30 to 10 o'clock.
Okay,
and
sure.
More than likely, that has to do with the switch, you know, that Europe's coming down, players are coming in, trying to figure out what they're going to do for the day.
Both markets kind of in action during that time.
Yeah, right, yeah.
So speaking of both markets in action, give a little plug for our Tigers Den open house this month. So we're coming through the month. It's February, short month as is. We've only got about 8 days left in the month. And today's the 20th. We run it all the way through this month only. Tigers Den open house. We encourage everybody to get in there. You can get a free month of the Tigers Den. We've got a great community of traders in there. You get to chat with the hosts. Everything is archived as well. And this will run all this month. I know we've gotten a bunch of great signups, and so I encourage people to check it out before that ends, the end of February. Tigers Den open house. Check it out.
And if we go over to Home Depot come out with some numbers too, right?
Yes, they sure did.
So let's see what they have to say.
Yeah, they liked it, and then they didn't like it.
Yeah, well, so the comp sales, but people going there, I guess. I mean, the comp sales, The estimate is 6.5%. They're at 7.5. So we're all doing over our houses. The stock right now is flat, I believe.
That's it. It was. So on the news, it spiked all the way up to 195. That one a little bit more short-lived than the Walmart spike, but made it up to 195. But it did hang. It hung at around 192 for a period from about 7:30 till about 8:50 in the morning, and then at 8:50 in the morning, it was up at 192.50, call it, and from there the slide begins by about $5, right to where, you know, it's up, what, less than $1 right now. But
yeah,
so the market really liked it at the beginning. And, you know, what's really remarkable is that Walmart, I mean, even got a spike initially, which is just crazy. I don't know who spiked it. That one's super short-lived, but it traded up to 107.51 for a short period of time at around 6 in the morning.
That's a killer.
And then it seems like at 6:30 in the morning, maybe there was a conference call, maybe something else, because the 6:30 in the morning bar is the one where it starts. It drops from 106 to below 102 in that 5-minute bar. But I don't know what it was doing hanging up above that level in terms of maybe just fighting through the top line earnings number to get through to where they talk about the online disappointment.
Yeah, you know, as we're talking too, folks, you know, Walmart's been trading the same place now 50 minutes. But this is going to get really dangerous if it breaks another leg, you know, down. And there's no reason it can't. Pretty intense, man.
Oh, I mean, you don't see companies the size of Walmart getting 1/10 of their value shaved off their market cap in the span of, you know, a couple hours.
Yeah, not even close.
No.
But guess what? That's what we have.
Oh, totally. And you know, like we talked about already, if you can't compete in the online arena, that's what a lot of the expectation is for Walmart going forward, for sure. I'm just pulling them up. What is their market cap right now? Market cap, $280 billion, and that's as of right now. So you're talking about they had, you know, $28 billion, $30 billion worth of market cap shaved off their stock in the span of a couple hours. Yeah.
And, you know, here, we'll switch gears. You want to see something here, too, folks? Domino's Pizza, right?
Yeah.
Okay, so this isn't down as bad. It's only down $5. But you know what's going to happen here? It looks to me, so let me, what they were talking about, Tom, is that their same-store sales has gone down.
Yes, I think it was the first time since, like, first quarter 2016, I heard.
And this is going to be, like, all about Uber Eats, right?
Oh, I can imagine. I can imagine.
I mean, they used to own that business, the delivery business.
There's a lot more competition. I do it myself. I've talked about it, ordering Uber Eats. I used to order Domino's more often because you were limited. Guess what, man? There's not such a thing as limitations for anymore.
No way.
Totally.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 228. NASDAQ is flat. S&Ps are off 17. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, everybody. Tommy O'Brien, Tom O'Brien. Dow's down 190, S&P's off 14, Nasdaq still positive 5. So checking out a few of these graphs, I mean, the Dow spiked all the way back to where we were at about 5 o'clock in the morning. Pretty remarkable, especially put in context when you look at the Nasdaq, which is currently a good 1% off of where we were this morning. We're at 67.90 in the Nasdaq 100 I'm looking at. And we're at 67.20 this morning. And the S&Ps are kind of in the middle of the pack, where we're about 11 points positive from where we were this morning, but we were almost a full another 10 points higher than that.
Yeah. You know, the Nasdaq's been strong. There's no doubt. This has been a monster. My take is it's a counter-trend bounce, and it's a big one. And I expect that, you know, that high of last week, you know, what we had on all the indices, folks, on Friday is that they failed on price and volume as they traded into the February 5th downdraft. And that's a monster downdraft. That's when, you know, the NASDAQ went from 72.77 to 69.56 in a day. So
yeah,
that was one monster. So it's expected, but the bottom line is that, you know, it did fail. And they all failed at that price projection. So, you know, now what we're going to get is that, okay, are the bulls going to be able to build some cars, get it up there again, and see whether it can take it out? You know, I suspect, my take is that, yeah, we're going to get a failure again. We're going to come back down the other side. This is only the beginning of a larger correction. So we'll see where this shakes out. But with the volatility, certainly is here, and it looks like it's going to be staying here for a while.
And it's both ways, right? I mean, it really is.
Yeah, look at that. Yeah, you know, I mean, it's still laying at what, 20.77. You know, it didn't back down into this 14 area anymore.
No, I know that would be a far cry from where we've been, for sure.
Yeah, so. And we're still in earnings, so there's going to be lots of numbers still coming out, which, you know, will keep some firepower inside the marketplace. Now, if we go over to the bonds, so the bonds, folks, bonds and notes have not got a bid for 2 solid months. And, you know, fundamentally, that makes sense. The Fed's saying they're going up. We'll see technically if it can get out of here. They still haven't been able to get out of here.
Yeah, that bond market, interesting over and over.
Isn't it?
Yeah.
The 10-year right now is 2.899, and the high for the last year is 2.909, and that was established like about a week and a half ago.
Yeah.
Probably just a week ago.
So about 1/100th, right, or 10 ticks, yeah.
if we go, let's go take a look at a few of these home builders, because what you had with, and I'll pull up Home Depot again. Home Depot come out inside their numbers saying that the tax break is great for the building industry.
Okay.
Well, guess what? Yeah, it is, folks, okay, but the rate's got to stay low.
Sure.
It's all about rates. It's all about what we signed for. No one buys a house with cash. I mean, you know, people do. We do too, but the reality is that we're all signers.
No, yeah, the market does not in general, right?
Right. There's no doubt. You know,
yeah, so see you have Lennar up there down for the day about 0.6%. Yeah.
Right, and that's not bad. I mean, you know, it's off its high of 72. You're at 60. This hasn't had a correction in a long period of time, you know. So, you know, I like what this looks like. It looks to me like we are going to bust out of the 2005 high. You know, you came there. Look at the volume. So on a monthly, we did 96 million in January, going into 36 million. Now what happens is this. You took the swing point out, took it out nice, big volume, it didn't hold price. When that happens, most times what you do, you're going to back down, you're going to go for it again, and what I've seen is that if you have the volume up there, which we do, and we also have it before the swing point, you have buyers. And if we get that taken out, then you're going to be in for a ride. And if you remember the market from 2004 even to 2007, it's important to keep your eye on these home builders, because the home builders themselves told all of us that that market was topping out in a big way. And they basically said it about a year and a half before it topped out, you know. But
yeah,
it's going to be important. And those rates are going to be important, because it's going to be like, okay, is the, you know, the rate of inflation higher than the rate that we're all paying, you know?
Sure.
Yeah, so.
We'll all find out.
We will. Let's go take a look at some of the higher volume stocks out here for today. We have, Rite Aid's the king. Now it's up only 4 cents, man. Walmart, look at Walmart is breaking down, folks. Now it's down 10.26. Let me go look at this again, because that's the number I was talking about.
Oh, big time.
Is it gonna do a second leg down? This should be pretty intense if it does a second leg down, man. Because, okay, so it's broken it. The number was 94.61. We just broke it, just under, and the volume's light, so we'll see. But the further you get away from 94.61, the bigger.
And you say get away to the downside, correct?
Yes,
right,
to the downside.
Yeah.
You know, because what you have is that you're getting into this gap now. And that gap is so dangerous, because the bottom of that gap is $90.85.
And what's the date on that gap you're looking at?
That gap is November 15th.
Okay.
And November 15th, it closed at $89.83. And on November 16th, it opened at $95.
I got you. Perfect.
And
I
it's
got
right
it up
there. See, the low of that gap is 94.72.
Okay.
And that's what we're breaking. And that's what makes it so dangerous also, folks, is that now you're into the gap, and those gaps are like magnets, man. You know, you get into the gap, and it's like, okay, you don't have any buyers there. You don't have any sellers there, you know.
And especially, I'll just add a fundamental take on it, is that gap came from them doing well in the online growth.
Yes.
So that's based on future expectation. Well, that gap just got kind of slapped in the face, where it's like, hold on a second, that online growth is not what we gapped away from, thinking that the future is bright. It might not be as bright as we thought if you're talking about holiday sales not growing where they thought they'd be growing. So that's, you know, part of that gap was online growth, which is interesting in light of part of this gap is not online growth, you know, so that's a big factor as well.
Yeah, and just means that, man, every time you come back to Amazon, it's pretty amazing, isn't it? It really
is. And it would make sense, like we were just talking about. I mean, somebody's going to become a competitor, and it doesn't have to be Walmart, you know. I mean, it might be an innovation that has not taken place yet in terms of some type of online retailer putting together the next version of Amazon somehow, or just, you know, a foreign company, whether it's, you know, Alibaba or something like that, figuring out a way to compete in the same arena. But it seems like somebody, it might take some time, though. You know, it might take some time. Like Kevin Hincks Kevin Hinks, I was just going to say, talks about, their biggest threat might be antitrust. I mean, they that type of deal, when they start, really, it's like every single week they're getting into a different business, right? If they don't get a competitor soon, they will start facing some of that, but not yet. Not anytime soon, I don't think. Yeah.
Pretty wild.
It is.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 179. NASDAQ is up 14. S&P's are down 12. Coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, everybody. Tom and Tommy O'Brien. So you want to jump over maybe and check on gold for the final couple of minutes? Quite a volatile day across the board. We got gold down 13.39. I mean, it's still right where it was about 9 o'clock this morning. But, man, spikes up almost all the way to 13.46, back to 13.39. Quite a week we had last week in gold. And there's volatility everywhere, man. Even crude oil's been bouncing around.
So gold's going to, test this high volume low from this morning at 850. That's what it looks like, which is that 1337.
Yeah.
If you want to hear something that's really wild, folks, and Tommy and I talk about it a lot, natural gas. So natural gas is actually up 3.4%, right? When we're talking about the weather, Tom, right?
Yes.
I pulled up the weather in Boston and New York and Washington, D.C. expect to break records forever. Okay,
sure.
They're talking 78 degrees in Washington, D.C. on Wednesday, and they're talking 71 tomorrow in New York. And if it's 71 tomorrow in New York, that breaks the old record by 3 degrees.
That would, I mean, it's February, man. What's happening?
Yeah.
That's not right. That's not.
And natural gas is up. Because what the story's about is that no one's going to be using natural gas, man, on the East Coast.
Pretty remarkable.
It is.
Because February, man, February, those heaters are supposed to be rocking.
Yeah, they're supposed to be rocking. And we will have those natural gas numbers for you on Thursday, folks. And what's going to happen is that the oil numbers now are going to be on Thursday also. So,
yes. Because of the Monday holiday, right?
Exactly.
Yeah.
And, of course, you stay right there, folks, because we get swim lessons coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back. And then we got our man, Mr. Andy Hex, of course, Tuesdays and Thursdays. And don't forget, folks, you can get all the programming right at TFNN. Just go to YouTube. You go to YouTube, you pull up TFNN Corp, subscribe. It doesn't cost anything. It just means that they'll let you know every time we get live programs up. Really easy to bring up the programs, see the charts, get all the video.
You got it.
Chat. Okay, pal. Thanks so much.
Thank you, man. Thanks, everybody. Have a good day.
Have a great one, folks. Have a safe one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.